Hey everyone, welcome back to Corporate Decoder. Today we're diving into Donegal Group's latest quarterly report, and let me tell you, it's a bit like a choose your own adventure book with insurance numbers. Before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Join to discuss deeper. Donegal Group, it's a company you probably haven't heard of, but they're in the insurance business selling policies through local agents, primarily on the East Coast. And these reports, these are where we can see how the company is really doing behind the fancy presentation. So let's decode. Alright, let's jump right into the numbers that tell the biggest part of the story. The company has a lot of investments, a little over $1.4 billion. Most of that is in fixed maturities. Those are things like bonds that they plan to hold to the end. They also have some equity securities, and it also has some short-term investments. Alright, let's jump right into the money. They took in almost $233 million from premiums, which is how much they charge customers for their insurance policies. But it gets more interesting from there, what they call net investment losses. Well, those were almost $500,000. So while the premiums were up, some investments were down. Now, what does this mean for the shareholders? The company is making money. A solid profit of over $25 million, that translates to about 72 cents for each share of their A stock. Now, the Class B shares, they get a bit less, 65 cents. It's good to keep in mind they are not equal, but there's something called other comprehensive income. It can be a little misleading, especially if you are looking at what the company makes. The income this time comes from changes on the value of securities. We do see a number here of 6.7 million. And now let's talk about the accumulated other comprehensive loss, currently negative $21.4 million, which is an improvement from the end of last year. Basically, they're still recovering from past investment hits. The loss comes from the drop in value in some of the financial instruments. Cash flow, it's like checking your bank account. Donegal Group's operating activities cash flow, which basically says how well they are running, is good. We see it at $25.7 million. Where's all that cash going? Well, they're investing it. The company purchased bonds and some equity. It comes out negative $14.9 million, which is how much they are investing. And what about dividends? There is $6 million in dividends out the door. At the short of it, the company is mostly investing and paying its debts. The cash is pretty stable with slightly over $10 million more to its name. Here we can see that Donegal Mutual Insurance Company has a big influence, controlling around 70% of the voting power. This is a result of Donegal Mutual holding 44% of the Class A common stock and a whopping 84% of the Class B stock. So what Donegal Mutual wants, Donegal Mutual usually gets. Here we can see that they consider the company to have three branches. One is the investments, second is commercial lines, and the third is personal lines. For the CEO, what matters most is how the insurance subsidiaries are doing in their underwriting, so what they expect to gain from the business before they get the money. Reinsurance is insurance for insurance companies so that they won't have to lose more than what they have set aside. They are set to recover 100% of losses from a single event but must exceed $25 million to claim it. They utilize a probability of default methodology and also establish an amount. Now, they are not expecting to lose a lot, and the current total amount set aside is $1.3 million. Now for the segments. Investments has a tiny expense. Most expenses are from commercial and personal lines, and that is not a surprise. You also see the net income pretty much comes from their insurance. Now, there are no big legal problems and there are no changes to the team. All normal there. Lastly, let's see a few of the exhibits. It is standard stuff, all signed and verified by the relevant people. But as always, there are some major things to keep in mind. The report says economic conditions can make predicting stuff hard, also laws can change that there is nothing certain in the market. Now, let's look at these results more broadly. It seems Donegal Group is in a stable position with solid premium increases and a profitable underwriting pool. The solid premiums mean steady business and growth, and the fact that Donegal Mutual has significant voting power means that the management is pretty stable. A couple of the risks, it depends on whether you can find good agents. Also, there is no change to the senior team, and lack of newer blood might cause some problems with innovation and agility. In all, Donegal Group is a safe company with pretty stable business. Alright, that's our breakdown of Donegal Group's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.